The SEC thing is a pretty picture. It's fun to look at. It's a total distraction from what's important. Period.
I want to shift gears a little bit to this. So, and I want to get your thoughts on this, Axis. So last week, the big talk within this ecosystem has obviously been, since the SEC thing filed on July the 31st, Richard Hart, should he fight? Should he settle? I have always kind of felt like the conversation is more nuanced than that, regardless of the simpleton thumbnails that I make for the channel that say fight or settle. I do think that it is more complicated because there's lots of nuance to it. We have, with Korth, there's all kinds of delays and stuff like that and just ridiculous things that are going to go on. But he had that really interesting tweet last week. He's been doing this, or his AI system, or whatever it is, helping out crypto lawyers. And he cited, I'm looking at the tweet again now. I mean, upwards of like 30 different case laws, that some of which are had actually gone to the Supreme Court. Really interesting stuff that anybody should look into for sure. It was a great tweet. And I guess I'm just curious, reading the tea leaves, what do you think? I mean, is this an indication that because he's never acknowledged this lawsuit. I heard somebody say that the other day, that yes, he acknowledged it. So that, go ahead.
Yeah, dude. Like, somebody made a comment, and I sent this off to Ewok before the stream. It's from this Twitter profile, Atropa Witch, and they said that they'd been let's see, I spent 8 years in litigation, no settlement to get out. It's designed to bankrupt you, so it's basically legal extortion. Well, we know that, right? That the SEC is going after things for easy money, but they also said that well, we don't think that we've actually seen him get served in person. I don't think that's actually happened, and he resides outside of the state, so. I mean, there's a potential here that he hasn't even been served. First of all, so that delays the whole process. And like you said, he hasn't not acknowledged the lawsuit. So, that's it's interesting, right? Because I think a lot of people believe that we need some sort of resolution for the price to move up, but I just don't see it that way. I think a lot of people think that to get centimillionaires or billionaire types to be interested in the asset, like, we need clarification on that stuff, just because it's bad optics otherwise. And that very well could be true, that it slows down the PulseChain ecosystem this cycle until a lot of this is resolved, 3, 4, 5 years from now. That wouldn't mean that we wouldn't get potentially like a 10x move on a lot of this stuff. Like, there's still plenty of opportunity in here for returns, even if it is like a muted cycle, regardless of what happens with RH. Remember, this is a suit against RH and not so much against, immutable code.
Right.
And so,
his
a lot
alter egos. Yeah.
Yeah. So like EOS has been in through this before, and they've paid to settle, and they got to operate as normal, right? And that never helped the price. XRP won some stuff, and the price pumped a few, couple 100%, and then now we're back below, pre-SEC resolution levels. So I don't think that plays as big of a role. I think a lot of people get wound up around that. But I also had another thought while we were talking. Sorry to kind of roll it back to what we were talking about before, but I wanted to make mention of with the T-share system and how the whole market, the whole hex market, is really short thinking right now. Either not staking, don't believe in staking, won't stake, or it's staked for less than a year on a net weighted average. And this is data that Chris Freeman from hexfire.io has actually put together to basically prove the point. And that's that the whole market is offside right now. Nobody's staking long. And this is what happens in the bond market when yields are inverted, and where everybody gets real short and they start buying 6-month yield bonds, or they buy 6-month bonds, or 1-year bonds, or 2-year bonds. And the macro market is the same right now, where those longer 30 and 10-year bonds, they're cheaper, and they're not paying the same yield or they're not paying a higher yield than these shorter term bonds. So what my thinking is just like the bond market will need to revert at some point in the future and price shorter term bonds lower or higher with lower yields, and vice versa for longer term, the hex market will have to correct, because so many people are offsides that remember that the only people who can sell are the ones with the coins. And if you're not minting new coins, then where are you getting the coins from to sell without pushing the price up first to get them?
Right.
And it's like a one-way equation where at some point there's an inflection point and a lot of the market gets left behind, and they're staking at a much higher dollar price and a much higher T-share rate. And we have a big T-share increase coming soon that's going to push it above 30,000 hex per T-share. And within a year or two, we could be seeing 40, 50,000 hex per T-share. And if you 10x the price of the underlying asset, the hex, by the way, it doesn't take a lot of money to do that. $20 million can do that on the ETH side right now. So it's like, it's setting up for the market to get offsides, or it is offsides in my mind. And everyone's thinking very short because we're got PTSD from the last 2 years of down and the dilution. And everyone thinks that this is just a normal bear market. It's not. It's a triple bear market, man. You had the bear market, and then you had the failure to launch of PulseChain last May. So it's bear market number 2. And now you had the SEC scare, bear market number 3. And meanwhile, in there, you have scattered in all this dilution into all these other coins and opportunities. When all this starts to consolidate back into what counts, Hex is going to be the thing that's on top.
Yeah, I agree. I think the T-shares, I think it's a self-balancing system. We talk about this a lot. I think, everyone says, well, if no one's staking, well, then that yield gets crazy, right? If it's only like 1%, what is it? And it's like 369% inflation.
It's insane.
To offset it. So there are so many little checks and balances in there to self-balance the whole thing that it's really hard to get too far offsides, like you said, or the people that are staking are the ones making out like bandits, and other people see that.
Those are the long-term believers too, right?
Yeah,
like us.
Yeah.
And like that's good because those are the guys that's really going to carry this thing to the finish line. It's not going to be the tourist that's coming in when we're halfway up through the bull market.
Exactly.
So yeah, look, when the grand scheme of this, look at the SEC thing is a pretty picture. It's fun to look at. It's a total distraction from what's important. Period.
Yep.
I think you are right on that, because we still, at the end of the day, are looking at timing and cycles and things like that. And you mentioned it with XRP, like the little difference you really are seeing in prices. I mean, XRP, since the beginning, has always been a hybrid crypto, and if there's anything in crypto that could have been acknowledged as a security, it would have been XRP. So, I mean, like the level of pump you're going to get, or you mentioned EOS as well, what Richard Hart has created in Hex, now with a blockchain like PulseChain, with PulseX, despite its horrible performance out of the gate, these products are just better products. And at the end of the day, regardless of what is happening, I think we're going to see that reflected in the price. So, the SEC thing, it's going to be there and stuff. But again, how much of this also acts as just purely like when Bitcoin's over 40K, people are going to buy. Doesn't matter,
I'm with you on that. And also in addition to your comments on PulseX, someone just made me realize that 2% of the user supply, or was it 3% of the user supply, has been burned.
2%.
2% has been burned in the first, what is this now, fourth or fifth month since launch, May, June, July, August, September. So the 4th month. In 4 months, we've burned 2% of user supply. So if you just extrapolate that out over like maybe 5 years, well, what is that? Like if you're looking at burning 20 to 25% of the supply of something, potentially over the next 5 years, what's that going to do to the supply and demand equation, right? And so I think inevitably, when you're going to see a tremendous, like we're there now where PulseX ratio to PLS is 4-to-1. Yeah. We're back at those base levels when the thing launched, and we saw it go to 2-to-1. So there's an opportunity here, and same for Inc. Huge opportunity on Inc. right now. And when the market's ready, it's going to absorb all of that supply, and just remember, from 80-cent Inc. to $80, that's 100x, right? So I mean, like, that one's a little different because its inflation model is a little different. It's just a linear line up to the right, 31 million per year. But the amount of inflation coming out year over year is going to be less than the year before, right? So if 31 million this year, you're going to get a doubling of supply the following year, and then you're only going to get a third of that total supply the following year after that, and on until like most of the supply will congregate in fewer hands, and it'll just be diamond handed, and it'll be the masses, the Metcalfe's law taking effect, the masses fighting over 20% of the supply, just like it always has been in fiat currencies and beyond. And then the PulseX thing has a whole other element with the buy and burn, where it's just going to be eviscerated. The user supplies, like, it's flatlined, and then now it's getting burned away. So like there's going to be, it could overperform Hex price in a decade because of the tokenomics of it. So when Hex and Pulse, or Hex particularly, stops paying short-term guys enough, they'll be looking to PulseX for the gains. But the guys that staked early on Hex, their interest is going to be so high in a decade from a 10-year stake that they're going to be earning all the inflation that the PulseX guys are seeing in price appreciation, but they're going to be getting it on the inflation side of the equation. So it's two different.
Pretty
curves.
twisted. Pretty twisted. Yeah.
It's wild.
Well, it also shows you how long this game can actually be. And I think you really are illustrating like how short-sighted. I mean, even myself, like, I mean, I think we're all, susceptible to those biases kind of like, just being on Twitter and seeing how different people are talking. People are really short-sighted right now. And it's not hard to get there. Like you said, I mean, it's been 2 terrible years. And I like what you said about 3 bear markets for this ecosystem anyway. I mean, it really does feel like that. And I think maybe looking at it through that prism might be able to help people get out of this funk that we're in right now, which we seem to be getting towards the end of, because this has just been, what worse can happen really at this point, as far as narrative type stuff.